record on this. So let's talk about the chapter 1, 2, and 3 exam tomorrow. And these are just the homework problems from chapter 3. Do you have any particular questions, or do you want to look at the practice exam, or is there particular areas that you're concerned with on the practice exam? Okay. Anything? Sophia, good question. I love breaking problems down in steps to digest. Is there a strategy we could use for that on the practice exam problems? Have you done the practice exam problems, or just a couple of them? Have you finished them? A couple, okay. Yeah, so what we usually tell students on the practice exam is do your homework, really study your textbook, go back and look at my PowerPoint slides, and then when you think you're ready, sit down and time yourself how long you need to do the practice exam. When it comes to the final exam, we actually put in more problems so that you could never finish the practice final exam. So the strategy there is a little different in that recognize what chapters the questions pertain to, and then make sure to do some from each chapter. Okay, all right. So how are you guys on account identification? And so do you even know what these things are? Is there anything here you don't know what it is? The room has gone silent. What are these things? Anything here? Do you guys know what all these things are? Okay, so we're going to let's look at this one. Do you guys know how to do this? So let's start. I don't know if I can write on here. That would be nice if I could write on here. Let's see. Let's see. I want you guys, can you guys call it out? Can you take yourselves off mute? And for accounts payable, what is the answer? See if I can put it in here. Is it income?
I think you can write on it, like there's a little icon on the top of the screen.
There we go. Okay, I got it. All right, thank you, Beza. All right, call it out. Accounts payable.
It's balance sheet credit.
All right, so we do like X there. Yeah, I did it. Okay, yay, thank you. Okay, accounts receivable, somebody besides Beza. So
balance sheet debit.
Excellent. Okay. All right, advertising supplies. Can I just call your names? And if you don't feel comfortable, just say pass. Colby, advertising supplies.
Balance sheet debit.
Okay. Daniel, building.
This is balance sheet debit as well.
Correct. And I'm not going to let you guys do cash. Cash is balance sheet debit. Common stock, Dalil.
Balance sheet credit.
Correct. Okay. Dividends, Maggie.
Neither.
Yes. Where do dividends go?
Dividends go in. Is it like retaining?
Retained earnings. Yeah.
Yeah,
That's the only place they show up. Okay. Bay, equipment.
Balance sheet.
Correct. Debit or credit?
Debit.
Thank you. Excellent. Hot tub expense. Ryan,
Is it an income statement?
it is debit or credit?
Debit.
Perfect. Yeah. So big clue there is it ends in expense. We do have assets that end in expense, but they have to have the word prepaid in front of them. I usually put them down as insurance or rent because that's what they mostly apply to, but they could be combined into a bigger category and just called prepaid expenses. Okay. But so long as it has a prepaid in front of it, it can be an asset. But if it's just sitting there, hot tub expense, it's an expense. Okay. All right, Miss Amanda, interest payable.
Balance sheet credit.
Correct. Okay, inventory, back to Beza.
Balance sheet debit.
Good. Land, Colby.
Balance sheet debit.
Yeah. You guys are getting a little bit faster. That's good. Notes payable, Daniel.
Balance sheet credit.
Yay. Office equipment, Jalil.
Balance sheet debit.
Yeah, got a lot of balance sheet here. All right, prepaid insurance, prepaid rent. Do both of them, Maggie.
Balance sheet debit.
Thanks. Rent expense, A.
Income statement debit.
Great. Okay. So there's that word expense again, and so that's a big clue. Okay. Oh, B, salaries expense.
Yeah.
Where would salaries expense go?
Salary expense. Income statement debit.
Good. So same, right? Expenses are all going to be similar. Okay. Ryan, can you do sales revenue and service revenue?
Income statement credit.
Yeah, great. Sophia, can you do supplies and supplies expense?
Are they both in the same category?
They are not.
Okay,
Not
supplies.
that I'm allowed to help you in a test situation. Okay.
Okay, supplies is in balance sheet debit, I think.
Good.
And supplies expense is in income statement debit.
Good. So supplies have a future value because we haven't used them up yet. Supplies expense are those supplies we used up over the course of the period, the month, the year, whatever. Okay, good. All right, Amanda, taxes payable and unearned revenue.
Balance sheet credit.
For the first one and both of them?
Yes.
Correct. Okay. Beza, utility expense and vehicle.
Utilities expense is going to be income debit, and then vehicle is balance sheet debit.
Correct. So a vehicle is like a long-term asset. So you have property, land, plant, building, and equipment. And a vehicle would be kind of an extension of equipment. The other term would be furniture. That would also be like equipment. The other term that you guys may not know, you go to Target or Nordstrom and they have fixtures that the clothes and stuff hang on. That would also be like equipment. Okay, and retained earnings, Colby.
Balance sheet credit.
Good. And it's really the ending balance of retained earnings. After we remember the order of things we do income statement first because we need net income. Then we do the statement of retained earnings, and whatever's on the trial balance, it might be zero, but it also might have a beginning balance. We use that in the statement of retained earnings. Beginning balance plus net income minus dividends equals ending balance. The ending balance retained earnings is what we use for the statements. And then the balance sheet is created from there. So I was really pleased with Monopoly. It seemed to really make everything come together for you guys. Even if you made a few minor mistakes, it seemed like you were really getting the accounting cycle. So good job. All right, so we have journal entries, and these are patterned a little bit like the ones in chapter 3. So there's really, just really learned 13 journal entries. Now with chapter 4, which will not be on the test, it'll be on the next test. But with chapter 4, you're now doing the adjusting journal entries and the closing journal entries. But for right now, you're learning 13 journal entries, okay? All right, so do you want to go around and do the answers, or do you have specific questions? How do you want to do this? Go through the answers really quickly? And something that I did for you in Monopoly was I gave you the list of accounts to use. And then the test won't have that, but there will be trial balances on the test. So you can use that as a guideline. Okay, all right. So let's start with, let's see, Daniel. Stockholders invested $100,000 into the business. Okay, so here's my first mistake that I just made. So I demonstrated that. I jumped to the problem, but you want to take a step back and make sure you understand the business, because it's really important that that kind of guides you into the type of business you have. So Juana Chavez opened a doctor's office as a corporation. So she's a doctor. She opens a little clinic. During her first month, the following events and transactions occurred. So what is the revenue source? How does a doctor make money? Somebody tell me. Go ahead and shout it out if you feel comfy.
Providing medical service.
Yeah, service.
Service, providing medical service. So if you guys go to a doctor, they're doing a checkup, or maybe you're sick and you go and tell them your symptoms, and they prescribe medicine or tell you to go home and go to bed, etc. So that at the beginning tells us this is a service business, okay? So look here, we've got service revenue here, all right? And then if we just look at the chart of accounts, there's a lot of very familiar accounts that you guys have all used before. All right, so go ahead, Daniel. Stockholders invested $100,000 into the business in exchange for common stock. What would be that first journal entry?
We debit $100,000 in cash and then credit $100,000 for common stock.
Perfect. And so what I always tell students is when you're doing the chapter 3 questions, because it's so cash-based, in your head, start with or even when you get your exam, make a quick note on the front of your exam, cash debit to increase, credit to decrease. So you look at all these problems from the point of view of cash, and that kind of helps inform the other half of the journal entry. Okay, let's see if I have that here. Let's see. Let me see if I can just like reveal these as we go. Hang on. Yeah, I can do that, I think. All right. Oh, I don't want to show you that yet. We're not ready for that. Okay, so as soon as we get out of here, I will release these solutions. But what I want to do is see if you guys have areas where you're kind of, so can you see both the On the left is the problem, and on the right down here, you can see the solution. Can you guys?
Yeah.
Okay, all right. All right, so now we want Jalil, number 2, should be hired a secretary starting tomorrow to be paid $750 a week.
That would be no entry.
Why?
They're not getting paid yet. Right.
Your answer to no entry is correct. Your rationale is incorrect. Can you give me more reasons? You hired someone.
Oh, I think I know the reason, but if he doesn't know, then
Jelly, do you want to take another stab at it?
You can go for it, Sophia.
is it because it's not a transaction?
Right. Why isn't it a transaction? What has to happen for a transaction to be?
Isn't it? Oh, isn't it because immediate money has to be involved to like be exchanged, and exchange has to happen at that time? Or
I love the word exchange. I don't like the word immediate money. What does that mean?
oh, exchange of like I don't know exactly. Oh no, I forgot.
Well, you're doing great. You know, it's so funny. You know, it's like you had it and then you put more on. So in order for it to be a business transaction, there has to be an economic exchange. There doesn't have to be a money exchange. So it means that, for example, if I'm a company and if I'm a doctor, if I provide service, and instead of you paying me, you say, send me a bill, then I'm going to record the transaction. What is the exchange? The exchange is the doctor provided service and the patient committed to pay for the service. So that's the exchange. Both parties have actually economically said, you owe me this $50 or whatever the number is. So when she hired a secretary, there's been no exchange of goods or services at all. There's been nothing. And so the secretary hasn't started working, so Juana owes her nothing. Okay. All right. Good, Jalil. Paid 1-year insurance in advance. That'll be Maggie. What would be the journal? Oh, let me reveal the journal entry there. Now, I just want to be clear on the exam. If you want to write no entry, that's fine. If you want to write nothing, that's fine. Sometimes students like to write no entry so that their numbers all align up.
I did prepaid insurance for debit, and then I did cash for credit of the 1,800.
So paid one, let's see. And that is correct. Prepaid insurance, 1,800, cash, 1,800. Good. All right, Maggie. Bay, number on October 6th, purchased medical supplies for $2,000, paid $400 in cash, which we would call a down payment, and billed, and the remainder to be paid in 2 weeks.
Supply debit 2,000, cash credit 400, and account payable 1,600 credit.
All right. So supplies, is that what you said? I'm sorry, I had a phone message. Supplies 2,000, cash 400, accounts payable 1,600. Is that what you said, babe?
Yes.
Perfect. Okay. So you still bring the supplies in at full value. Sometimes students don't like that. They said, but you only spent 400, but you have an obligation. You have agreed to pay for the supplies. You've received 2,000 of supplies. So there's been that transfer and now you owe the money. Okay. 9, provided medical services of 3,400 and billed the insurance companies. This will be Ryan.
I'm not sure.
Okay, that's fair enough. So if you are in that boat tomorrow, I want you to take that journal entry and write debit 3,400, credit 3,400. I want you to do that first thing. And then start thinking about what the exchange was. In this case, because it's not a promise, it's not a future event, the doctor has provided service. So when the company provides service, that triggers us that it's revenue. Okay. Okay. So which revenue account is going to be appropriate here? And you can look service revenue. I think it's the only one you've got. So it's going to be service revenue, and revenue normally has a credit balance. And so that's going to be, you can see it over here, credit service revenue. And then because the insurance company hasn't paid yet, it's going to be accounts receivable. Okay. All right. So any questions on that one? Sophia, you're next. Paid for the remainder of the supplies purchased on the 6th.
Paid for the remainder of the
I
supplies.
think we missed a question.
Yeah, wait, which one?
Oh, you're right. Sorry. The 17th, paid, boy, I really jumped ahead. Paid secretary's weekly wage in cash, 1 week only.
Okay. Hold on. If there's no money there, does that like involved? So that means the credit, what I put in credit and debit, I don't know.
You could, but you hired a secretary up here.
Oh, to be paid $750 per week.
Correct. Yeah.
Okay. Oh, I see. Problem solving. Okay. Would that be salaries expense?
I think that's your choice down here. Yeah.
Yeah, salaries expense, and that would be in, debit for $750, and then cash and credit for $750.
Let's take a look. I don't know why I put it as wage. Salary, just to be safe, put salary and wage expense,
Okay.
just so you're covering it all, and cash.
Would it be wrong if I put salary expense, but in the key?
No,
it's
because because the problem doesn't tell you which one it is.
Okay.
The fact that it's $750 a week, so it really does suggest it's salary.
Okay, cool.
All right. Who is next? It goes back to, I don't know why my thing's moving around. Amanda.
I had a quick question.
Yeah, go ahead, Ryan.
Would it be beneficial, like you mentioned, to bring a highlighter to highlight certain things? So like for example, for this, would it be beneficial to highlight certain words, like when it says medical services, like highlight services, so that kind of gives you an idea of what the title is gonna be?
Mm-hmm. Mm-hmm. Okay. Yeah. I think it helps, honestly. Okay, it will be Amanda, and it will be provided medical services of $680 and was paid in cash.
The cash will be debit for $680, and service revenue for $680 credit.
Yeah, that is correct. Cash, debit cash, $680, and credit service revenue. Oops, I don't want to show you the rest. Okay. All right. Beza paid for the remainder of the supplies purchased on the 6th. That's a good one. Okay.
So account payable will be debited by, what is it? Wait, let me see. I think 1,600, and then cash will also will be credited by 1,600.
Good. So there you have it. Okay. So these problems are forcing you guys to look back a little bit and say, oh, what happened in an earlier problem, just as if it were a real business. Okay. All right, under Beza is Colby. Received 1,100 in advance of a medical procedure to be performed. So this is like, you're gonna have your appendix out or your tonsils out or something else. And the doctor says you have to prepay for this $1,100. So the doctor takes your money, and how's the doctor gonna record this?
It would be debit cash for 1,100 and then credit unearned revenue for 1,100.
Yeah, that's great. Okay, don't forget this unearned revenue account. Remember, both the unearned revenue account is a liability account. It's not a revenue account, and it's a liability for the doctor, for any company, only when the customer prepays for something, okay? So if the customer prepays for something, the company can take their cash, and it's always quite happy to take their cash, but it's, they can't call it revenue because they haven't provided it yet. Once the surgery's been performed, they can call it revenue. Okay, that was Colby. Now it's Daniel. Billed $80 to a student who will pay in 3 days. That makes no sense, but just roll with it. Bill
Yeah.
to it. Well, it could be a patient. It should say patient, but maybe the patient.
Okay. Yeah, I was trying to wrap my head around this, but I'm assuming it's for a service. So I'm going with service revenue and accounts receivable. So you debit the accounts receivable $80 and credit the service revenue for 80.
Awesome, Daniel. Accounts receivable, service revenue. And that one's a tricky one right after this one. But the
Yeah, I was trying to figure out what the hell was going on
because
here. but-
you kind of wonder, well, was the student prepaying for his whatever he had the procedure, you know, but the fact that he's being billed as opposed to him making a prepayment or an advance, prepayment advance, that's when you want to ask which account is it. Okay, last one, Jalil received an electric bill for $50 for the prior month's service.
That would be utility expense, debit $50, accounts payable credit $50.
That is correct. Okay, that's awesome. Okay, so sometimes students don't like this last one. They say, well, it didn't happen yet. You don't have to pay for it yet. And the answer is yes, it actually did happen. It happened in the prior month. In this last, you know, it's month of October. It says prior month, but it means October or September. And so they have to recognize this cost. Okay, so that's good. All right, so lots of room there. And then your statements, did anybody have trouble on the statements? Did anybody do the statements? If so, put net income in the, because we do net income first, put net income into the chat box. It's very quiet.
I think Beza had a question in the chat.
Well, why can't we say insurance expense and prepaid insurance? Number 3. Okay, let's go back. Purchased 1-year insurance in advance. So on October 3rd, you just bought the insurance. So you haven't used it up yet. So you've just paid for it. Think of a timeline. You've just paid for the insurance. So it's a debit to prepaid insurance because that prepayment has a future value. You have learned in chapter 4 that as an adjusting journal entry to a prepaid account, then we do that journal entry, debit insurance expense and credit prepaid insurance. But when you just originally buy it, you haven't used it up yet, so you cannot expense it.
All right, thank you.
You bet. All right. Okay, give me the net income if you have it. Jalil says he has it. I gotta check and check it. Anybody besides Jalil? Jalil? Okay. Oh, I have in the solution for this, I have a blank trial balance. You don't need that. Okay, let's take a look. And Jalil, your number is correct. Okay. Oh, and so Sophia, and Jalil, Sophia, and Colby. Okay, so let's take a look here. All right, so here we go. So we used the correct number 119. Let's just go through them. So what I want you guys to do, so if you get a scrambled list of accounts like this, you're going to want to, it's not in the order that you're used to. The proper order is assets, liabilities, stockholders' equity, revenue, expenses. And this is all scrambled, okay? So I don't have a final date there. You can assume that it's the end of a year. They started on January 1st of that same year. And this is as of December 31st, except for retained earnings. So what this is telling you is this is the beginning balance in retained earnings, okay? So we've got a sales, and I don't think we have any other revenue accounts, okay? So what goes with sales are expenses. So this is where you really want the highlighter. So you have the sales, you have insurance expense, and you want to differentiate the income statement accounts from the balance sheet accounts. And supplies expense, okay. And the other mistake that I want you to be really mindful of is line up your numbers so that you don't take the wrong number because you're looking at the next line down or the next line up. Okay. So we want to be really clear on where your numbers are coming from. So I'm highlighting the income statement accounts, which is the revenue account. Sales is a revenue account. We don't have service revenue in this example. And then the expenses. So the other accounts are balance sheet or something else. Accounts receivable, accounts payable, wages payable, common stock, retained earnings, equipment, supplies, cash. Those are all balance sheet accounts. And then dividend is its own category and it's only going to be on retained earnings. Okay. So here's the solution for the income statement. Service revenue. Now, if you did it and you wanted to put these three line items under here, just draw a line for the total expenses, okay? And then calculate net income. You'll notice that I did not make these negatives, okay? I did not make these negatives, just leave them positives and then subtract them, okay? Any questions on the income statement? Okay. All right. So statement of retained earnings, I want you to be really careful. On your Monopoly example, the beginning balance was 0. That is because you were starting your own company. So the beginning balance is always going to be 0. In most businesses, they've been going for a while. So they have a beginning balance and you can see it here. Retained earnings, 5,000 as of January 1st. Well, we want retained earnings as of December 31st. So that's what we're going to calculate. So we put beginning balance plus net income minus our dividends equals ending balance, 115. Okay. Now I've done it right. Okay, good. This now is our this is now our balance sheet, and it's not just a balance sheet, it is a classified balance sheet. And so it's really important that you know where things go, okay? So if we do, let's see if I can do this. It's not gonna let me because it's being stubborn. Here we go. So this is I don't know if it'll let me stick this in here. Nope, it's not going to let me. Okay. It's a classified balance sheet. I can't put that title there, but I want the current assets together with a subtotal for current assets. If you only have one item under PPE, it's okay to just break it out. If you have more than one item, I want a title PPE and then total PPE. So what goes in there would be equipment, land, building, less any accumulated depreciation. Okay. And then total assets. On the liabilities side, put your current liabilities. Now, in this case, they were both. So you don't need a total current liabilities and then total liabilities. But in the test, you're going to have it broken out between current liabilities and long-term liabilities. So you need a subtotal for all of those. Any questions on that? And then total stockholders' equity. So let's go over here. I want to show you something in the textbook. Go into the textbook and we're going to go to chapter 2. And I would like to see chapter 2. Okay, here we go. All right, so this is the gold standard for the classified balance sheet. Okay, guys. So when you are in chapter 2, the Franklin Company, if you have access to a printer or take a picture of it so that you can, this is what I want. I want current assets, total current assets. If we have long-term investments, total long-term investments, property, plant, and equipment, total, intangible assets, and a grand total of total assets, okay? Current liabilities, total current liabilities, long-term liabilities, total long-term liabilities, and total liability. If you miss any of those subtotals, you will lose points, but I do give a lot of partial credit. And then common stock retained earnings, total stockholders' equity, and then total liabilities and stockholders' equity. So why do we call it classified? Because they're classified into these different categories: current assets, current liabilities, property, plant, and equipment, and so forth. These are all numbers that investors look at, and then they analyze whether a company is high risk or low risk based on how it's categorized. Not how it's categorized, but how much money they have in each category. So if you have a lot of current liabilities, but not very many current assets, that's a warning sign. Okay. All right. Okay, so the example I gave in the practice exam is not much shorter than what you'll see on the test, but there will be a few more categories, so you should know how to do them. All right. So if you get stuck on the statements, don't spend 45 minutes on the statements, move on. And then, all right, and then we have the essay, we'll come back to that. And then just pretty much more practice, which make an income statement, retained earnings, and a classified balance sheet, and so forth. Okay, and you'll be able to see those solutions tonight, right after this. And then the last bit before we go to the essay is knowing how to do these sort of short answer problems, okay? All right, so what would you rather, we've got about 5-8 minutes left. What would you rather do, the short answer problems or the essay?
Which one has been more difficult for students in the past?
Oh, that's a good question. We have drilled on these before. So if you went back and looked at chapter 2 lectures, you could see it in there. And on the Zoom links, you could go back to announcements and you could see the Zoom links and look at that. So these are saying, you know, if you know assets, if you know liabilities, what's the total common stock and retained earnings? that kind of thing. And it would be, in this case, 300,000. Okay. If you know common stock, retained earnings and liabilities, what's total assets? And then we get into some harder ones here. So, okay. So I'm hearing that, I'm not hearing that you guys want to do the essay, and I think that's a good choice. So let's go look at that. Okay, so here's the essay, and it's highlighting total revenue, and it's highlighting net income. Okay, so this will be your first time that you will be analyzing trends of data. Okay, so the way the problem will read, I asked for both in the practice exam, but the way the problem will read is pick one to write about. Okay, so thesis statement, evidence, and conclusion. All right, so let's look at this company. 3 years of total revenue. That's their sales revenue or their service revenue. You don't know who this company is at all. It's a mythical company, all right? So your first sentence, you will probably write last because you've got to analyze the data first, okay? So leave that now, but I truly only want you to say a very short sentence here. I want you to say, is this trend favorable, unfavorable, or neutral, or inconsistent? So what am I talking about? Is this revenue trends? Revenue is what is at the top of the income statement. It is your sales. Everything else is subtracted from revenue until you get down to net income. Is this a favorable trend, an unfavorable trend, or neutral or inconsistent? What's your best guess? You can put a best guess in and you can change it after you look at the evidence. Go ahead and put it in the chat. What is that? A good trend, a bad trend, a favorable trend, an unfavorable trend, or neutral or inconsistent? All right. Beza and Maggie say favorable. So why do you say favorable? Because the revenue is increasing. Yeah. 711, a million, 1,000,003. Yeah, and you could say the same about net income, but let's just focus on revenue, and the mechanics are going to be the same. So we think that our trend statement, number one, is going to be the trend, and you want to say the name of the company, the 3-year trend for Coldwater Dairy ending February 3rd, 2018 is favorable. The 3-year trend for Coldwater Dairy ending February 2013 is favorable. All right. So now let's get some evidence. And this is where you're going to use numeric evidence and you're going to use percentages. So you are going to take and calculate the difference between 711 and 1,000,000 to tell me how much it grew. And then between 1,370 and 1,000, which, so you can eyeball this. This is about $311,000 growth. And this is about $370,000 growth. Okay, so that's your numeric evidence. Now I want percent evidence. Percent evidence is, I'm going to put this in the chat. This year minus last year divided by last year. Okay, so you're going to take that dollar difference and divide it by the previous year to get your percent and multiply it by 100. And you're going to do the same. You're going to take that 370,000 divided by 1,000,000. You'll get a decimal, multiply it by 100 to get a percent. So let's look at the solution here for sales, and it's going to be the same for both. So we're just going to be building a sentence here, building an essay here. So you can say experienced significant improvement in the 3 years, 2011 to 2013. You could say Coldwater Dairy 3-year trend ending 2013 is favorable. Either one of those is a great first sentence, okay? Second sentence is your evidence, and it could be 2 sentences. Sales increased 40.63% in 2012 compared to the prior year, 2011, an increase of, and here's your dollars. The company continued this improvement in 2013, increasing 36.92 or $369,519. Okay. Now, something I would like you to point out is looking at the growth rates. Can you guys say one more sentence? The growth rates are slightly lower in 2013, 36%, compared to 2012, 40%. While the growth rates are slightly lower, these are exceptional growth rates. The company shows strong performance in the 3 years. So that's your wrap-up sentence, okay? And then I have a similar one for net income. Okay, so how did I calculate the net change? I took $1,839,000 minus $711,704. I got the difference, and I divided 289,135 by 711,704. I got 0.4063, multiplied it by 100, and I got my percent, 40.63. Okay. Second year, 2013, I subtracted 1,370 minus 1,839,000. I got 369,519, divided 369,519 by the previous year, 1,839,000. I got 0.3692, multiplied it by 100, and I got 36.92%. Okay, that's your numbers, and your percent are really valuable because they're your hard evidence of whatever it is you're going to say. Okay, and you can see the growth rate in the third year compared to the second year is slightly lower. Those are phenomenal growth rates. Okay, just want to be clear on that, but it is slightly lower. And the same thing plays out with net income. Higher growth the first year compared to the second year compared to the first year. Slightly lower growth the third year compared to the second year. Still really great growth, okay? So simple sentences. I know it's real formulaic. This is the kind of writing I'm going to ask you to do for the project, keeping it really simple and just looking at growth rates and then the overall dollars, all right? Any questions on that? Okay. All right.
I have a question.
Yeah, go ahead, Beza.
Are we gonna be asked to define terms like the full disclosure principle type?
Oh, the theory?
Mm-hmm.
Not on this. It would have been on your quiz if you got asked on that. So you need to know those concepts if you're going on and in business, not just accounting, but business. But I'm not testing you on them. So.
Okay. And how about like, do we need to calculate like current ratios or working capitals, things like that?
If I have a ratio on the exam, I won't tell you whether I do or don't.
Okay.
I will provide the formula on this exam. I may not do it for all the exams, but I will do it for this exam. Let's see. Solutions, don't want that. Let's see. I've got it scheduled to release. Now have you guys been able to access the solutions?
Yes.
Oh, good. Okay, good. So they're already published. This is the first quarter I've tried this. So you guys are good. You have the solutions. That's great. Okay. All right. Well, good luck. I will see you guys tomorrow. I hope you're all healthy. If you're not, reach out to me separately. So
Thank you so much.
You're welcome. It's good to
Thank
see you
you.
and hear your voices.
Thank
So,
you.
You
Thank
too.
you.
good luck.
Bye.
Take care. Bye-bye.